Hello everyone and welcome to Day Trader S&P 500. Today is Wednesday, March 1st, 2023. My apologies. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. Again, we want to get all of our YouTube subscribers caught up with all the action that our monthly subscribers to our newsletter have had, getting reports every day. Today we got 3 reports today. I may as well just get right into those. We'll start to get you guys caught up with yesterday, the market close report on February 28th. Okay, we were looking at a few things here, but I want to point out the retracements, the unprecedented retracements. There's a decline here, 1 and a 786 retrace. There's a decline here in red, 1 and a 786 retrace. There's a decline here, this black one, and a 986 retrace. It went 41.8650, and the make or break was 41.8825. Talk about a setup. Then a decline here in a 786, another decline in a 786, a normal 618, an expanding triangle at 1 degree of trend, and a larger expanding triangle at a larger degree of trend. We had a direct hit down here at this target, a direct hit right here at this target, 40.7575. There's more that aren't on this page. And then out of the triangle, we had a thrust down and a 904 retracement, another move down, and a 9.79 retracement. And then we got another move down and a 9993. We had a 4003, 0.75. I think we came within 1/4 of 1 point of 100% retracement. I can honestly say in 3 decades of doing, I've never seen that before. I've seen it come within a point. I think it was in the great financial crisis or the .com bubble, one of those two crashes, if you will. But anyway, that's what we had on the 28th, but I want to show you guys we were looking for a third wave down, and there was our target, 39.4375, and we hadn't quite reached it yet. That was yesterday's market close. So we'll get into the email alert that we put out this morning, 11:22 a.m. Eastern, and our first downside target was achieved at 11:19. We put that out 3 minutes later, and you can see right there the target was 39.4375, and the market hit 39.43. Okay, so downside target hit. So what happens next? Let's see. So we get into email alert part 2. We're trying to get our subscribers on the ball. We just hit a downside target, so a few minutes later we put out email number 2 or part 2. And there was our upward retracement targets, and there's the first one at 39.74 and a quarter, okay? And that was the other downside that was hit. So downside was hit, now we're looking at an upside, all within the same day. And if I can fast forward you guys to our post-market close report, again today, 3rd report of the day, and we have a direct hit on our downside target, and then a direct hit on our upside target. And you can see right there, the target was 39.43.75. The market hit 39.43. Then our upside target that we put out in the email alert was 39.74 and a quarter, and it hit 39.74 within 0.25 of 1 point of a direct hit, okay? You can see the direct hit here, the direct hit here. There were direct hits back there. But anyway, we'll show you guys on the picks, but you can definitely see lower lows, declines, okay? And there's that direct hit on the downside target and the direct hit on the upside target, okay? And there that is in detail. There's that one in detail. And our next targets are here, and 39.16 for 1 degree of trend and 38.99 for another degree of trend. And here you can see on the hourly bar, the direct hit back here at the bottom of 1, the direct hit up here at that wave and a direct hit coming back down here, and we don't even have the direct hit up there. And then there's all those unbelievable Fibonacci retracements. So let's just get into this too. I put this out late at night. By the way, it's after 10 p.m. Eastern time. So I was still looking at the market. I got a new computer and I was getting that all set up for the last 3 hours after the close. But anyway, you can see what's going on here after hours. From that 39.91 high, we have 5 waves down and an expanded flat wave 2. Another 5 waves down, 618 retracement. Another 5 waves down. There's a direct hit on that 1-to-1. There's lower targets to be had below that, as you saw in the previous report. Okay, let's do the US 10-year. Okay, here's that 4.335% back in October. And keep in mind, I don't know if we want to show this or not, but I'll just scroll back there. Okay, but this began all the way back, if I can get there, March 2020 lows, okay? Pandemic lows. That was a 39-year, end of a 39-year bear market. Interest rates from the 1981 high of 18.45% in the 30-year. From that low, we have a 5-wave advance into this high right here. There's your 5 with a circle on it, and there's that 4.335. I'll show you guys the alternate count first, which counts this as a 1 down, 2 up, 3 down, 4 up, and a 5 down. And then we've got to move up here. You can see it's past the 618, approaching the 786, and of course, when it goes above 4.335, it is no longer a valid count, okay? But the primary count has this labeled as wave A down, wave B up in parentheses, and wave C down, which makes a larger degree wave 2. You can see the interest rates are up over 4% again, and no coincidence, here comes third wave down in the stock market, okay? So if that was 1 from the March 2020 lows into the October 22 high, and that is 2, which is short of target. Here's our targets. C equals A at 2.975. And the 382 retracement of that entire move up from the 2020 low is 2.81, okay? Those are still open as targets, but obviously we need to see this thing totally collapse from here. But if that is wave 1 up here, the Roman numeral 1, and if this is wave 2, which is our primary count, then bear with me, wave 3 equals wave 1 way up here at 7.30%. Okay, and that's the minimum. Let's see if the 1618's in here. There's the 1618 at just about 10%, 9.79 or something like that. So let me get this back in focus. So the next time I look at this chart, the numbers are actually in there. That's what we're looking at in the US 10-year. Let's get to the ES, okay? This is the big view, the daily chart from the all-time high. 5 waves down for wave A in parentheses. A wave B up, direct hit on price and time. We get so many direct hits, we just don't even write about them anymore. They take up too much room in the charts, okay? Then we have 5 waves down in red for 1 of C. And then we have an A up, a B down in black, and a C up for wave 2 of C, okay? That topped on February 2nd at 42.08. A move above the 43.2750 high negates the count. Always when we trade and when we make charts, we always ask ourselves, where is it wrong? And that's what saves you money, keeps your losses low, if you will, and keeps you on the right count. We know as soon as this goes over 43.27, we're looking at 44.66. But unless or until that happens, the trend is down. And you can see the lower lows off of that February 2nd high. That's the big picture. We can get into that February 2nd high right here. That's an hourly chart. And this shows a lot of those 786 retracements and then some. We've got a 1 down, a 2 up, which is a 786. A 1 down in red and a 2 up, which is a 786. There's those. I know I went through that before, but this shows graphically all those retracements, which are just ridiculous setups. I don't remember so many 786 retracements holding. The vast majority of them get broken to the upside. You usually have a 382, a 500, or a 618. You get up to the 786 and above, and it usually breaks. It goes over 100% retracement, and it invalidates the count. But these all held. We have, I think there's 4 786 retracements that held. Yes, and then there's 4 over 90% retracements. There's a 993. The make or break was 40.0375, and it hit 40.0350 within 1/4 of 1 point of 100% retracement. And you can see what happened after that. It just sold off. And if you look, even from this triangle, lower high, let me fix that. I just typed that wrong. Lower, well, it's lower lows and it's lower highs too is what I meant. But we have a bunch of lower highs and lower lows going all the way back basically to last year, but January of last year. But you can see the lower lows, lower lows, lower lows, lower highs all the way through here. There's that direct hit there. We only listed that one. Here we got 3. Here's our next targets at 39.16 and 38.99 at 2 different degrees of trend. Going to the 10-minute, here you can see that expanding triangle and the throwover and the thrust downward out of the triangle that we were expecting, and it granted or accommodated our forecast, and we have a wave 2 up, a 97 point. This is unbelievable. 97.99 retrace from that high. Then we get a low and a normal 618 retrace, and here's that 99, 99, 4 nines and a 3 within 1/4 of a point. Then we get a wave down. We get a 4 overlap leading diagonal and a 5, which hits right on our target. There's the 3943.75. There's the 3943, and these are the email updates that we had today. We're looking for a move up to 3974, which was a 382 retracement, and it came within 1/4 point of that, and you can see it sold off there. And actually, we'll get that out of the way. This is a live look at just about, what time is it? A little short of 10:30 Eastern time here. Okay, so I think we probably have that. There's that 1 minute right there too. You can see where that's going. Okay, so we've got 5 down and expanded flat, 5 down, 618, 5 down. I think I had it labeled on the other newsletter, post-market close. But let's leave you guys with, let's see here, the post-market close. Okay, with that, the targets there. That's a bigger picture hourly bar from the wave 2 high on 2-2. Okay, that's it for now. And until next time, take care, everyone.